Hello, everyone. Thank you for attending. This is Siwin Yi, and my guest host is Mr. Richard Advani from Guarantee Rate Mortgage. Welcome, Richard, and thank you for your time. I know you're very busy doing investment loans, all types of different mortgage loans, many buyers out there. So we have a lot of great things to cover. Before I begin, please smash the like button and subscribe to my YouTube channel, and also join my network. Put your email into my website below so you can become a free member of our real estate investment community. Without further ado, let's talk about this very important chart, which is from a high level, pretty much will explain a lot of different things in the past and what history has shown us, and presently what we can potentially project into the future with respect to the housing market. This information, Richard and we went over many times, and this is conclusive evidence. Now, we have consumers out there that for whatever reason, getting so emotional. They always think about the worst case scenario. And of course, a YouTube video, clickbait type of negative headline, doom and gloom, the fear porn out there, unfortunately have given people a lot of misleading and misinformed information, which is sad. Really, I mean, people that are brainwashed into watching these negative headlines and YouTube clicks out there, the crash porn. Unfortunately, a lot of those people are being paralyzed by fear as a result. And it's just so sad people have to do this. And we talk about American dream, people that can afford it to buy a house or for primary home or investment home. More, if it wasn't for this negativity out there, more people will be able to achieve the American dream. And we're the only few individuals in the YouTube world or any other world in the social media that try to provide people with some authentic, accurate, well-informed education. That's so people can make an informed decision. They could become a homeowner or investor to create generational wealth for themselves. I know this is a long speech. You can sense that sheer frustration. I'm sure, Richard, you agree. You and I keep telling people, get off the sideline. We preach to the choir. It's just so sad. Few people are willing to pull the trigger because of this fear-based doom and gloom negative headlines. So you have a quick comment before we go with this chart, Richard?
There's always going to be stuff in the media and fearmonger stuff. You got to keep in mind, media thrives on that. And as human beings, those are the headlines that catch us as well. Much like COVID, the general idea a lot of people have had this year was, oh my God, rates are up and real estate's going down. And most of that is headline driven. But when you actually read those headlines, what we see is that values are marginally down over last year, maybe 1%, 2%, 5%, depending on where you are. But they're up still dramatically since 2 years ago, since the start of COVID. And remember what everyone was thinking then, right? Once again, housing's going to get crushed and people aren't going to make their rent. And, instead, the opposite happened. Values rallied 30+%. Rents rallied the most they've ever rallied in such a short period of time as well. Don't believe the fear mongering headlines. Look at the actual data, and don't get that data from Fox News. Look at actual data. It's not hard to find on the internet in terms of what is happening with house prices, what is happening with housing supply.
Absolutely, Richard. With that in mind, the data that this chart we can share is very conclusive evidence what's really happening out there. For those people who do not know history, is doomed to repeat the past. We can show you realistic history, show you the conclusive data. This is indisputable. This is conclusive. This is factual, what we're sharing on this chart. Let's proceed. We look at the three separate metrics. The light green line indicates the active listing count for the past 18 years. This chart starts from 2005 until 2023. The light green line is active listing count. The blue line reflects the number of sales, number of housing transactions. The black line below, the month of inventory. The month of inventory, just to clarify, a balanced market where demand equals supplies is around 5 to 6 months of inventory. Keep that in mind. Without further ado, when we go to the real estate crash or the recession, the worst in history, actually is only one time. As you can see, during the 2006, 2007, 2008 crash, we have seen the active listings are really off the chart. There's so much supply, so little demand. The month of supply of inventory are very high as well. It's way above 6 months, maybe 9 months supply of inventory back in 2008. Since 2008 crash, as you can see, this line of active listings continue to decrease pretty dramatically, especially from 2006 all the way to 2012. right after the crash. Actually, this is the best time to buy real estate right after the crash, the 2012. I remember those days. The active listings continue to level up from 2012 until around 2016. Then the listings continue to decrease year over year, very consistent in terms of sales, or less volatile in terms of the number of transactions over the past 18 years. The last few years are very significant. Supply of inventory at the peak during the crash 2008. There's a lot of homes for sale. After the crash, the major recession, then gradually we have seen less and less inventory of homes because builders have not built enough over the years. Now we have seen home sellers are sitting pretty. They are not selling because of the historically low mortgage rate. Let's focus on what's happened in the past few years. This level, we have a pretty decent demand and low supply. It's fairly healthy pre-COVID 2019 in terms of active listings, similar. Now, here's the last few years. This is mind-boggling. 2021, because of the mortgage rate decrease down to around 3%. 2021 is historical year. It will never be repeated again ever, even beyond our lifetime, Richard. You're younger than me, but maybe you might see this again in your lifetime. But for many, probably not. 2021, we have 3% mortgage interest rate. Then we have 1 month of inventory. That's why we have seen a historical year whereby homes were skyrocketing due to massive demand and very low supply. This growth is just not sustainable. We get it. As we're seeing right here, during the summer of last year, during the second to third quarter summer last year, then the mortgage rate has increased dramatically from 3.5% to 4% to 5%. Into the summer of 2022, and we have seen 7.3% mortgage rate in October 2022. And then all the people locked in at the historical low mortgage rate right now, most of those people are not selling. So as if we fast forward to this year, 2023, we have seen some very troubling trend. We have seen some massive low supply of inventory. Right now, it's 2.8%, and you can see the arrow is coming down. Yeah, it is 2.8%. It's trending toward less than 2.8% months of supply of inventory, which is almost at a historical low. And then look at the active listings. Especially right now during spring season, spring 2020, springtime. Usually on a historical basis, we have seen very robust housing activity because that's the seasonality of it. But now we're seeing active listings on a downward trend. Again, there's not enough homes to buy. The home affordability issue is one of the worst in the 40-year history. A lot of people can't afford to buy, but the inventory is so low. Look at the inventory, like less than 500,000 right now based on this chart. And we need about 1.5 to 2 million homes. We're way below where we are right now. I don't know about you, but Richard, you do loans all the time, and you tell me some of your case examples. But before you do that, I've been talking to my network partners in many markets in Las Vegas, in Phoenix, and in Florida, and in Texas. A lot of those entry-level homes, medium price homes below the benchmark, those entry-level homes, they're priced, they are rehab correctly, they are turnkey. They are selling like hotcakes in all those good markets. Like, could go home, get like 5 or 10 offers, and many of those offers are 5 to 10 above list price. So, Richard, let's talk about rate. The mortgage rate right now is amazing, right? 6.18% today. What's today's date? 7 April. Yeah, mortgage news daily. The rate is 6.18%. We are coming back down to almost like a 6% threshold. The 5.99% mortgage rate that occurred like a month ago, 5.99. Now, then he went back to 7% a few weeks ago, a month ago, now back down to 6.18. We have in a space of 1 month from March to April of this year, we have 1 full percentage point of reduction of mortgage interest rate. So this is mind-boggling. Richard, tell me some of your buyers right now, when they're getting on loans, are they going through some challenging in their market? They try to get a loan through you right now the past few weeks. Are they having trouble finding a home? Or have they seen bidding wars in their respective market? Tell me in real time what's going on with some of your investment loan buyers.
Yeah, absolutely. And I wouldn't say there's quite bidding wars yet, but there's still more buyers than sellers for every property. And even though things have changed and rates have changed things and reduced, obviously, the demand a little bit. Instead of having 40 buyers for every home, there's still 4 or 5, right? So there's been a big shift, but it has not a big enough shift to change the market from a seller's to a buyer's market. Now, people aren't being as sellers aren't being as unrealistic with their listing prices now. Listing prices have gone down. I'm sure people would have seen that, but those listing prices were much higher than where values were a year ago. And that's where the fact that prices are pretty flat from last year comes into play. I had a lot of people tell me, like, oh, I've seen homes in my area have price reductions and you can see things are going down. And I'll actually, with them, research that particular property. And what we generally will find is people were still listing properties ridiculously high. But if we look at values of that same property in January of 2022, that value in January 22 is now in line with their reduced list price. Things haven't really gone down dramatically anywhere. I'm sure most of you look around your neighborhood, right? How many for sale signs do you see? Not many. In fact, I would say, and supporting, of course, your graph, the fewest I've ever seen in my life. And most of that is relating to, of course, the fact that people got those 3% and sub 3% interest rates. The Fed's plan backfired, right? They wanted to slow housing and cool housing and make things more affordable and free up inventory. Well, what they didn't think of for some reason is, hey, how many people are going to want to sell when they have a 2.5% to 3% 30-year fixed, and the market for a new property for them is going to be 6.5%, right? None of us, no one wants to sell. And so the supply and demand issue hasn't gotten solved. And yeah, there's less buyers out there because rates are higher, but there's less sellers for that same reason. But it really shows that, to me, real estate's really robust still, right? There's these external factors of rates, but even with the Fed hiking rates like they have, housing hasn't been crushed. In fact, it hasn't gone down as much as they would have liked it to. And once again, it goes back to what's caused and will continue to cause the big aggressive growth in real estate is supply and demand. And until that's solved, real estate will keep going up. That's economics 101.
Yes, I absolutely agree.